Moving forward with our fourth part here in using Ichimoku in trading binary options, trading medium-term time frame here, and it is time to take a look at the 4-hour chart. What you're seeing in front of your eyes is the Euro-Dollar 4-hour chart. Now we've done all our analysis basically on the Euro-Dollar, but all the examples here may be used on each and every single currency pair using the Ichimoku setups that you've learned here. Whenever trading binary options, the main concern a trader has is to look for the best possible setup for the option to expire in the money. Now if the option is in the money at the expiration date, then this means the option is profitable and the trade was successful. The following are the conditions for binary options to be considered profitable. So binary options, in a binary option, if you buy calls, so buying calls, means that at the expiration date, you are looking for the expiration date price to be higher than the striking price being the actual price the option is actually bought. If these conditions are met, then the option is set to expire in the money. So you are looking price to be higher at expiration date. In normal language for the spot market, this would be considered to be initiate a long position. Now on the other side, on the other hand, if you are buying calls, if you are buying puts, then you are looking for price to be lower at expiration date. For the regular spot market, this would imply going short. Based on the above, the expiration date is important when trading binary options, and based on the time frame analyzed, the expiration date should vary, and therefore the binary options should differ depending on the time frame analyzed. Now the 4-hour chart is one of the most important time frames out there, as with the most of the brokers it is associated with fixing times. The London, New York and Asian fixings are exact moments of time when, for example, options on the regular options market are expiring, and that makes the flows in the normal spot market to influence current price. For example, the Thursday of in the third week of each month, on Fridays, options are on Thursday. Options are expiring, and you should be aware of that, especially if big option interest on the regular option market is on deck. So the binary options recommended to be traded on the 4-hour chart as this intermediary, I would say the medium-term time frames are intermediate time frames. So the binary options recommended to be traded on the 4-hour chart are options with medium-term expiration date. Also looking here for end-of-day expiration date that can be used if price is reaching a specific level at fixing times. But my recommendation here would be to look for either end of week, if the analysis is made at the beginning of the week, or 1 week expiration date. As you can see, 4-hour chart implies quite some analysis, and it depends very much on the pattern. If the pattern was, for example, this pennant that is visible also on this 4-hour chart, then values for end of day, depending very much on the moment of time. See, this is 4, so this is 4 GMT, 4 AM GMT, so end of day expiration date for this pennant, because it was most likely then in 2 or 3 candles the pennant to break. So end of day expiration would have been appropriate here, buying calls for the pennant, or even end of week. So this has been this was happening on, let's see, on the 9th, so on Monday. So end of week expiration date 131.70. So end of week we are still having 3 trading days, but chances are quite good for this to expire in the money, even for end of week expiration. Then one touch options. So let me let me say here that this would be an appropriate moment to go end of day expiration based on the pattern, and the option should be buying calls. Or one-touch options. Another option to use is the one-touch option, ideally to be traded when specific patterns appear on this time frame, like contracting triangles, pennants like it is this one here, and so forth. Not the pennant that you are seeing here when you're having a let's say a ranging pattern like a contracting triangle of a higher degree, so that should consolidate quite some more, like it is this one here. So this is a contracting triangle, a range, and this should be treated also with one-touch options. Now, why? Because each contracting triangle has 5 legs, A, B, C, D, E. In this case here is A, B, C, D, E, and by the time the E wave is done, what one should do is to measure 50% retracement from wave A. So let's just measure the 50% retracement of wave A, something like that, and then just take a horizontal line and mark the 50% line here, and until the E wave it is being done here. So engaging in one-touch option, as you can see here, the 133.28, it is being touched all over the place here. So involving in one-touch options with expiry date as with expiry dates bigger enough in order for this trend line to touch the 50% line. So just like that, that would be your expiry date. So that would be your expiry date. So buying one-touch options from here to here based on this reversal contracting triangle would be available and would be appropriate. And as you can see here, you had from this moment of time, or from this moment of time if you want, you had 23 candles for buying one-touch options, and 23 candles means multiplied by 4, 80 hours. So something like almost 1 trading week to buy one-touch options with the expiry here. So quite straightforward there. And of course you will have the option to use the option builder tool to customize your binary option. That one might also be a way to go, starting with this time frame, as Ichimoku allows properly to identify potential buying, bouncing or rejecting areas. Now let's move on, still on this medium-term time frames, and let's move on to exactly concrete and exit strategies for this time frame. Stay tuned, please.